COVID-19 is having a major impact on the grain sector as energy implosion is cutting ethanol and biodiesel demand, reports Chad Burlett. In last month's letter we mentioned some early signs of improving economic activity in China with the caveat that, it took 2 months of very draconian steps by the Chinese government to achieve those gains. If the United States is faced with the same challenge, I don't know that we'll be able to eliminate the freedom of movement for tens of millions of our citizens. Unfortunately, we very quickly learned that we could and would. Unprecedented times brought unprecedented actions. We have shut down much of our economy and a majority of the country has been told to shelter in place. The US and global shutdowns have had a dramatic impact on energy prices. Crude oil prices were above $65 per barrel in January and below $20 per barrel earlier this week. Saudi Arabia made an early attempt to get OPEC and Russia to reduce production to offset the lower demand, but when the Russians balked, the Saudis increased production and started a price war. U.S. gasoline prices have plummeted, making ethanol uneconomic to produce and uneconomic to blend. Goldman Sachs (GS) has issued some very dire economic projections. They see second quarter U.S. GDP growth down 34% and they see unemployment hitting 15% by mid-year. Globally they think we are headed for a deep recession. That economic reality led to unprecedented volatility in equities and a general risk-off mentality in the trading community. This was evidenced by a 300,000 contract drop in agricultural futures open interest in March, putting us 800,000 contracts below a year ago. With 40% of corn's demand coming from ethanol, it was the grain contract most negatively impacted by crude oil's implosion, dropping 7.5% for the month. Biodiesel suffered a fate similar to ethanol's, which led to a 6% drop in soybean oil prices. At the other end of the spectrum were wheat and soybean meal. Wheat was first led higher by domestic demand as millers produced more flour for bread and pasta to feed the homebound consumers. Shortly after that, China unexpectedly bought 485,000 metric tons (kmt) of U.S. hard red winter and hard red spring wheat. The final push to wheat's monthly highs came when Russia and Ukraine both announced limits on their April through June exports. For the month, May wheat futures closed more than 8% higher and gained 71 on May corn futures. Very simply put, Americans were consuming a lot more carbs and a lot less ethanol.